Hey guys, Evan here. I know I said I was going to do a trade recap video for you about 2.5 weeks ago, but I remember when I went to go do that video, I found that my mic was completely busted. But I finally got a new mic, so let's just dive right into it. I'm going to do some trade recaps on the stocks I traded today, and I also just want to talk about big gappers in general. Um, if you have not realized already, based off my Twitter feed or some of the trades that I do call out in chat, I like to trade big gappers on the short side. And if you ever tracked any of these plays, ever built a data set for them, you would probably see why I am more short biased on these big gappers than I am long biased. Um, more often than not, these things do tend to fail and often fade. They are the ones that are making these big red doji candles on the daily chart. I'm sure you've seen these before. DPW has a history of them. See this one, big squeeze, big push, but eventually did fail and fade. You know, this big red doji candle, another one, big red doji candle. These are what I'm tracking. These big gap ups. Previous day 142, open 472. It's a 200% gainer, 200% gap up. That is what I'm tracking. This is what I'm looking for. Some people like to call it gapping crap, the all day fader, or gap up short. It's all different names, it's just all the same meaning. I personally like to call it the gapping crap because I just like the name. Let's see. What are some other ones that happened this week? Acor, big gap. This one kind of just crapped out the open, faded. Sorry. LJPC. That was a big gapper. Had a push. Ended up failing and fading. Let's see, there's another one. GOVX, one happened on Monday. Big gap up, push. This one ended up failing, fading, big red doji. This is what I'm looking for. If you start to track these, just like every pattern, nothing's perfect. No, it's not 100%. And these do sometimes do not work. And I'm sure you guys remember SPI on 9/23/2020, and this was a big gapper on the day. Look, previous close was 105, opened at 354. That's about a 250% gapper. I mean that's exactly what I look for. But this one did not fail. It did not fade. It did the complete opposite. Trap shorts, and it just was a squeeze from hell. Any short that kept adding, trying to, average up, thinking this thing just had to fail, or emotional ones that just kept fighting the trend. They got annihilated. I'm sure they lost a lot of money. I mean, this was a complete short. I'm sure so many short accounts blew up that day. I was actually short on it that day. Way down here. Before any of this even happened, I respected the trend. I got out at my risk level, and that was that. I took about a 5 to 6K loss on it that day, and based off the size I was trading, that was a good loss for me, especially what it ended up doing. I kept to my plan, and I got out when it was time. It's a good loss in my book. Another recent crazy gapper that did not work. These are what are called black swans. There's another black swan, ACY, another squeeze from hell. Shorts again probably got annihilated. A lot blew up that day. I was actually short on it that day, but a much tinier size, thank goodness, because it could have been really bad. It was a big learning lesson for me on that day. Maybe I can get more into this one in another video, but uh, I got stuck in that absolute crazy squeeze. I'll just do a little, I fought it, but luckily I was fighting it only with small size, but that small size I was in, what, 2K shares for me? And it was so hard to get out right here in these levels. I mean, look, yeah, it's 1 minute candles, but these were 10-second candles realistically. I remember on that day it was so tough to get out. These were so quick. It's like this was a halt, and as soon as it opened, boom, halted again. Opened like within seconds. This thing was just halting and opening and just squeezing and halting again. It was so tough to get out. Um, and I got trapped, and luckily, it had a pending news hold, which totally saved me. I was never in trouble really blowing up this day, but I was gonna take about a whole month worth of gains just gone in one day. Big lesson for me. I broke my rules a lot that day. I didn't respect my risk, and and I just fought it. Um, which leads me to my another point, which is more often than not, these things do fail and often fade, but it only takes one to really mess you up. If you don't, have a good idea of how these trades, when to get out, when not to fight it. That's why it is so important to track them. You need to track every single variable you can. You want to understand how these trades, what increases the odds of it failing and fading. And in order to do that, you need to track all the variables so you know which ones are important and reliable. To give you a better idea of which ones to attack and which ones you want to avoid. Um, for example, you know, as in like tracking everything, you want to know how often do they push out the open? How big is that push? How high does it go? How often does it just tank out the open? What's the float? What's the market cap? Um, you know, Different size floats and market caps will trade differently and move differently. So you want to put those into different categories based off floats and market cap. Are these what's the volume on the day? That's the thing. Giant volume. In the pre-market, also track pre-market could indicate, maybe it's a bit crowded. Maybe this thing is too strong, too much demand. May not fail and fade. But two important factors that I love the most are when these things are gapping into resistance is one of them. Here's a 300 million volume candle. This is what I look for my resistance. I'm sure there's tons of bag holders stuck in these areas, and it was gapping into overhead supply right here, up in these areas of people just begging wanting to get out, bag holders just wanting to break even, and that's something I look for. So I would put this 300 million candle into the resistance column of the gapper of the day in my Excel sheet. The bigger this candle is, the better. And this one was huge, so it was great. Another thing is dilution. That's something you gotta learn. For the filings. I'm not gonna go into that right now. Maybe I could do it another time. But a quick indicator for me on DPW, knowing that this thing was a heavily diluted stock, was just look at the 5-year. This thing got all the way up to, the prices show that it's up at 4,600. Like, yeah, no, it wasn't. The only way that it was is, the stock has a lot of dilution, which pushes down the share price, and then they ended up having to do a reverse split. Here's two of them right here. Maybe they probably had some more up over here. Maybe my chart's just not telling me right now, but look, this one, a 1 for 20, 1 for 40. Those are huge splits. And, they need to do them because once their stock gets down under $1, NASDAQ has a requirement that you have to be trading above $1. In order to bring your stock up, you have to do a reverse split, which will increase reduce the shares, but increase the share price of your stock. So that's what they did. That's a big indicator for right knee that these guys, actively dilute. But, you always got to go double check in the filings, make sure that that's happening and see what it is, and track that down. Well, what kind of dilution is it, and put that into your Excel sheet. And, I separate them. I put them in categories, for resistance. If it's gapping into big resistance, that's a whole different category for me. If it's gapping into, if it's gapping up and has a lot of dilution, that's a whole other separate category for me as well, But if it's got resistance and dilution, that's another category, and that's like my favorite category. DPW is one of those today. I'll get into, and I said volume. Volume's important to track. For example, volume today on this one was absolutely pathetic compared to what it done previously. And what does that tell me? That's telling me that, the demand on the day, the volume, which is basically the demand, is not enough to overwhelm the supply up in these areas, or to overwhelm the resistance right here from this volume candle. If this candle was trading, basically the same amount, or looking like it was going to overwhelm the volume on that day, that would tell me there's enough demand here to break through these areas of supply, these areas of resistance. But it wasn't. Didn't even come close to trading that. So I pretty much already knew demand was just not here today, and it was going to run into some nice resistance up in these levels. And so, let's see, I shorted it, right? I took a starter in the pre-market at this push before the open. And then I was giving it a sec after the open to see if it wanted to squeeze out some shorts, do a push somewhere, and into more of the resistance levels over here. Like I was hoping 687, up in these areas, but it didn't. It was doing some heavy selling pressure out the open. I'm sure a lot of back holders wanted to get out. I'm sure they were doing some dilution at the open too. So right when I saw that heavy selling pressure out the open, I just went to slam it down right about 634 right here. The rest of my shares got into about an 8K position overall. And then I just stayed patient. I'm a really patient short. I like to let these things, fade out. They can go lower than you think. This one was a choppy fade today, which that happens sometimes. But, I really let the stock work for me, I let the chart play out. And that's what I did. That was my short on that one today. Let's see, what else? I also traded CNET today. Similar example when it comes to that, supply and demand. This, look at the volume right here. It's a huge volume candle. Crap volume on the day. Not enough demand to break through these levels. It's not going to do it. Let's take a look. So, a good little tip to compare volume is just check out the 5-day, 1 minute. And look at this. Look at the volume here on that day, 5 days ago. Look what it's doing here. Yeah, speaks for itself. It doesn't even come close to these areas. It's not going to bust through this. It's a good quick way, just, do pure example of volume. And I also like to go back to these charts right here, because if it pushes into it, I want to know which levels. Ideally the best is, right in the center, in the middle. If it gets to the middle, the heart of all this, resistance and volume right here, that is where I would like to hammer it short, but so often it doesn't get there, and it, tops out before that, which it did today. So, it'd be sweet if it got to, 360, 350, even, 380 would have been awesome, but that would have been tough based off the volume it had today. But it's already getting heavy and topping out at the 325 area today. See, spiked into that wall that we were just at previously on that 5-day. Spike up here. See that? It would have been If we got up higher here, yeah, I would have slammed it more. But it was on SSR, and I did try to hit it. Um, but it was I couldn't slam the bit, so it was tough to get filled, and I only got small size in, and I didn't add on this lower high right here, which I should have. But um, it was a solid win. I think I only made like 400 on this one. And then, oh yeah, DPW, I made like 6,500 on that one today. But this one I'm just fading out, and I ended up getting out at about 280. I just wasn't being patient. I was in too small size. I didn't care, but I should have. I should have just held on more. And my last trade on the day was DTSS, and always check the chart history. And this one has such, look at this, a history of 1 day failed spikers. That's another variable I look for. I like to track them as well. Chart behavior. Uh, this is a great example of a chart behavior and what this thing often does. History does repeat itself. And look at all these giant wicks. Big squeezes every time this thing gets some volume. Giant. It does some giant squeezes and then fails and ends up doing a big wick. Another big wick. Look at all these wicks. Just always failing. These 1 day spikers always failing. This was just a gap fail. Gap fail. And that's something I look for. And when it was trading today, as soon as I saw that and it started squeezing this morning, I was thinking, oh, it's gonna, history repeats itself. It's just gonna spike, squeeze all these shorts out, and then just fail and fade the rest of the day. And that's exactly what it did. I got a little nervous just because the volume was so massive today. I shouldn't have let that scare me out. I messed up on it, and I traded small size. Also because my risk, I was risking off this volume day, the major daily resistance, which here on this one is 624, right at the top. So that was my risk, and, it was a bit far away from that level, which is also why I traded smaller size. But after this giant crack right here, look at that huge crack, that would have been my signal, to get in some more shares, and I just didn't do it. It was a mistake on my part, but ended up fading throughout the day. I covered my shares at like 440. The ones I did have, I don't know, I think I made like $300 on this one. Nothing big, but I guess they do add up, and well, that's what I did today. That's my video. I hope you guys enjoyed. Hope you got something out of it. If you liked it, please give it a like, share it around, and I'll see you in the next one. Later.